Up, everybody? Happy Thursday. Hope you're well and having a great week. Welcome
How's
to
it, everyone?
Ninjacators' new weekly event. Sorry, Richard, didn't mean to cut you off there.
No worries. Keep going.
For those of you that missed me yesterday, I imagine it's a small number, but for those of you that did, I appreciate you bearing with us. A little under the weather this week, but I am back in action today, rejoining Richard for today's session. So welcome, guys. Alan, Bob, Christopher, Dan, Murray, Rick. It's great to see you guys.
Hello, everyone. All the familiar faces. It's good to see.
Yep,
Not
love
faces, should I say, the names.
our usual suspects, man.
Yeah.
We're going to give everybody a chance to get in, get settled, and we're going to get started right on the hour here, guys, with today's edition of Profits at Noon. So welcome. Hang tight for one more sec. If you can hear us, see us, if you have any questions for us, please feel free to fire away in the chat. We'll also make sure to have some time for Q&A today. Awesome. Looks like we have a pretty nice group coming together here. We're going to go ahead and get started, guys. It is noon Eastern. It is the top of the hour. So welcome again. Happy Thursday. For those of you who have joined us this week and missed me yesterday, just a little under the weather this week, but I am grinning, bearing through it, and I am back here today and excited to be here with you guys. So co-hosting these sessions with me, as always, is our very own Richard Krugel. As you know, I've had the pleasure of working alongside Richard for over 5 years now, so I'm still learning to this day. So excited to show you his levels today. We also have a little tool spotlight in store for you. What we want to show you is the weirdly powerful reversal strategy you draw on your chart that can make up to 15 times bigger profits on your wins. So this is the only futures indicator for NinjaTrader 8 that lets you draw a Z pattern trading directly on any futures market chart. So those of you who are familiar with some of our tools may already know what tool that is going to be. So I'll save the big reveal for Richard. Yeah, we're going to go ahead and get started here, guys. So again, we are live Monday, Wednesday, and Thursday at noon Eastern for Profits at Noon. We're showing you the levels. We're stalking for entry and steering you clear of any market traps or news bombs that could be waiting around the corner. So you're going to get lots of cool live analysis and also some actionable levels you can copy and stalk, and you can monitor these trades and the outcomes with us in real time and in action. So be sure to join us for all these sessions to see how the analysis plays out. We're also very excited to roll out our Levels to Lock newsletter very soon. We're going to have some more updates on that in the week ahead. So keep your eyes peeled, keep it on your inbox as well as in these sessions, and we hope to be sharing some of that with you next week. So the Levels to Lock newsletter will cover everything that Richard's going to have for you today. So without further ado, I am going to pass the reins over to Richard. He's going to get started with today's live analysis and our Levels to Lock, and I will check back in towards the end of the session for some Q&A as well as a very special coupon code for our tool spotlight. Richard, to you, sir.
Thanks very much, Nathan.
You got it, sir.
Nice having you back again. I'm really tongue twisted here. And welcome, everyone. Thanks for joining me again. A lot of familiar names here. We've had a nice turnout last night as well, so really cool to see that and everyone returning again. But before I do start with today's analysis, as always, just a quick reminder that all information in today's session is provided for educational purposes only, and it's not an offer or recommendation to trade futures, stocks, options, or Forex. All right, let's try to see where my bloody chart went now. That should work. All right, can everyone see my screen okay? As always, I'm going through the ES, the NQ, the YM, Russell, gold, and crude oil as well as having a look at these levels to lock, as Nathan mentioned. I don't know what's going on with my talking today. These levels to lock will be ready in a newsletter about 20 minutes prior to the stock market open, so that you're prepared for the day ahead. And then on every Monday, Wednesday, and Thursday, when we do these live sessions, I'll be then seeing where price is in relation to what I expected prior to the session starting, where there are relations to these levels to lock. If you are new to these live sessions, you'll see that I've got quite a lot of lines in my chart. I do use a blend of market geometry as well, give me a bit sort of idea direction which price might move into. Also look at a little bit of pattern analysis. I'm doing most of the work on a 4-hour time frame, and then these horizontal lines, you see we've got blue ones on the top. We've also got these little dashed sort of brown lines, red lines in the bottom, and also these dashed blue lines. Now these red lines, and this you can't really see it, it's like a orangey sort of line in the middle, and these blue lines to the tops is your normal pivot points. That's included in a NinjaTrader platform, so anyone has access to that. But what's really cool is that we also have these projected levels that we call projected range highs, and the standard deviations to the upside, as well as projected range lows, and they have two standard deviations to the downside. Now, this is a proprietary indicator we use here at Ninjacators, and it's basically based on all these levels are determined from the previous day's volatility. So quite often, working around my game plan, that's I'm obviously going to give you guys in the levels to lock when that's ready to go out. I do look at the overnight session. Since I'm based in South Africa, most of you guys will be sleeping, so it's perfect, and that's probably why they want to, not probably why, but why they are using me to, do these profit at noon sessions as well as the levels to lock newsletter. So that I have a good idea where price has been over during the overnight session, and if certain levels are clear, where price might move towards. And that's obviously why we have these levels to lock. So once you have or got hold of that newsletter, a lot of these levels will make more sense, because I do projections, like I said, during the overnight session before you wake up, and then give you my expectations. Now you can place targets at these levels or fade the market at these levels, or whatever it is you might ever want to do. But in any case, long or short of it, that's what all these levels are. I'll be mentioning them as I now go through the analysis side of things. So obviously, Tuesday we had this one hell of a drop. Fed Chair Powell was a bit more hawkish, or what should we say, the investors took his what he was saying in that testimony as quite hawkish, and we've seen a very strong decline. And this, funny enough, I think when was this on Monday? We were looking right at the profit at noon session on Monday, price reaching an area where I had confluence between different angle lines, and these angle lines are market geometry lines that I incorporate in the analysis side of things. Again, these lines were there prior to price reaching it. I didn't go and draw this box after the fact. So if you want to go revisit that video on Monday, we've had this area where we also had an upward sloping pitchfork, and we're basically two different angles, one sloping down and one moving to the upside, crossed each other. Is exactly where price reached, rejected lower from. And it's pretty cool to see how this actually happened prior to Fed Powell's speech. You see this quite often when you have reaction in market geometry from an area, in this case, very strong resistance that I mentioned. We also had at those levels, you can't see this now because it's obviously in the past, but we had projected ranges highs at those areas. I think we also had an R2 or an R1 from the pivot point perspective. So a lot of confluence horizontally as well as angular at that area, and expected resistance to step in. And yeah, didn't expect we were going to get such a strong decline, but we did. And then pretty much since that decline, price has been moving sideways. So today, in today's levels to lock, I've really started falling out the form. I don't know if I'm supposed to show you this, guys, yet. I don't know if it's even going to look like this when you do get access to it. But you can see here that I mentioned all of these previous days open, high, lows, close, and ranges, as well as all of these lines that you're seeing, the actual pivot lines, as well as these projected ranges. So you'll have this prior to the session. Now, very importantly, I give a quick little bit of a trend analysis of what I'm expecting the trend is, whether it be on a daily time frame or in a bigger picture, whatever the case might be. But this is very important here. We got a game plan that I write on every Monday morning, my time, obviously. And this will give you both bullish and a bearish sort of game plan, if that is the case, So what I'll do quite often, and I'll read this just off screen so you can see exactly what it is that I've done. I didn't go write this just now before today's session. I've actually updated at 3:11 p.m. This was at my time, right? It's not even 3:11 p.m. now. So we are currently, I am South Africa 7 hours ahead of you guys. So that was sort of like at 8:11 a.m. Eastern Standard Time. And I'm just going to quickly read what I've read there. So I was going to say, like, if we see a break and close above 399,350, so around this level. And now this is prior to the newsletter went out, that we could expect a bullish move, potentially heading towards 4,325, which was this previous high over here, right around this 50% FIB retracement level, and potentially a move towards R1 at 4,01050. And you can see that over here as well. So that gives you sort of an idea of what the actual newsletter is going to be telling you. Again, I didn't go write this after the fact, so it really gives you that good sort of like a game plan for the morning of where potentially price could move towards for both the bullish and the bearish side. Now, I know I've been talking a lot now without doing too much analysis here, but we've pretty much opened up right at today's pivot point at around, what's it, 3,991. Again, price moved above those levels I mentioned, went straight to R1 and got rejected and is moving lower now again. I've also got a bearish scenario also within that same stuff that I wrote here. Again, it's not available to the public just yet, but I was saying that if we're going to see a close and break below S1 today at 3,978, that we might see a move to this median line down here, which at that stage when I wrote it was about 3,971, potentially move towards the projected range low today at 3,963 in the quarter, and also S2, which is very close to that projected range low at 3,959 and a quarter. All right, but you can also see, very interesting, how price has been moving around, right, hugging this median line, sloping to the upside. Again, I didn't go draw this today. If you want to go watch these videos and the previous recordings, I've had this on my chart for quite some time. So I've also had a question yesterday. I can't remember who it was, but someone was saying, do you actually use these median lines to trade from? And I did explain that I look for confluence, but also use them as areas where you could potentially trade from. So they do obviously provide opportunity. In many cases, I would like to see a bounce higher and then a pull back to it, like we did over here once, twice. And this sort of gives you a bit of a game plan. If that acts support, then potentially the bullish side is going to be what is going to, you know, happen for the remainder of the day, which we've had today. Nice move to R1, reaching those targets that I mentioned. All right, that's the ES. Now, just before I look at the ES, NQY and Russell, we do have the job numbers coming out tomorrow. It's almost as if bad news these days is good for the stock market. And the reason being is that obviously anything inflation related, it's been scaring and spooking the markets most of last year, even moving into this year, right? So, you know, Fed Chair Powell, during his testimony, I think it wasn't a speech, it was a testimony. When was it? On Tuesday and on Wednesday, mentioned that, you know, the job market is still pretty resilient. And now the key economic figures are still pretty strong. So while those figures are pretty strong, or whatever it looks at, mostly like job market, I would say as well, one very important one, then, you know, they might continue to aggressively raise interest rates. Now, obviously, the market didn't like that during his testimony, and bam, you went down. Now, today we also had the preliminary initial jobless claims, pre-leading tomorrow's job numbers coming out. Now, they expected a consensus of 195. The previous was 190, but the actual was 211,000 claims of joblessness. So now we can start seeing that number has been falling a little bit. In this case, a little bit of bad news, and this is exactly what we happened around about that time when that news came out. We've seen a strong move back to the upside. So I've been saying this yesterday, you're potentially going to see a bit of a volatility sideways mostly. And yes, on an intraday scale, price has reached these targets, which is perfectly fine. A lot of traders, you guys don't probably trade longer time frames You probably day trade. I don't know. It'd be nice to know. Maybe drop me what you do in the chat there, what your strategy is, or the holding time for your trades. But in any case, I'm really on the sideline a little bit here. I didn't expect this very strong decline. On the ES, it's crazy how it went straight from that upper median line way back to this lower median line. And if tomorrow's job numbers comes out and it's terrible, then I'm actually going to think the market is going to move up. Just because for that reason, then Fed Powell could say, okay, it's starting to have an effect on the economy, and we might not then, or the markets or the market participants will perceive then perhaps, I'm saying perhaps because anything can happen in the markets, they'll perceive it as that the Fed might not be that aggressive with the rate hikes next time. So anything can happen. So but on the sidelines, this might be it, the move for today, and things might just quiet down during the overnight session. And then as those numbers come out, just be careful and be aware of them when they do come out. What time would they normally come out at 8:30, right? Yeah, non-farm payrolls and the unemployment rate at 8:30 a.m. SC tomorrow. So just be aware of those numbers. Keep an eye on that. And again, we won't do a session tomorrow again, but just like all I'm trying to say is be careful. If those numbers are good, my explanation, expectation is that if they are bad, that we're going to see another move back to the upside. And then from Monday onwards with these sessions, we can start planning whether I'm going to have a bullish bias or a bearish bias and so forth. Right, sorry, a lot of talking there from my side, but I just wanted to get that off my chest, what I'm expecting, especially from the economic news events perspective. On the NQ, sort of also opened right at the pivot point at 12,200. Price already reached S1, bounced straight from back to it and reached R1 and R2. So a little bit of a up and down sort of thing going on here. Same thing's going to potentially happen with NQ. Probably will. All of these indices do follow each other, especially the ES, NQ, and the YM. And yeah, just have to keep an eye on what those job numbers are going to reveal tomorrow. Then on the YM, price already came very close to testing these lows on the 1st of March. Price actually undershot already a 78.6 retracement from this low in March to that high that materialized on Monday, was it? And then a massive decline on the YM as well. So similar thing, price closed, or sorry, open around the pivot point around, when was it? 32,800. Moved higher to R1, found resistance at 32,973. But the same thing on the ES, NQ, and the YM, expecting up and down sort of sideways nonsensical movements as we go into tomorrow's report. So not really too much to say on the YM besides, and keep an eye on what that report will reveal and see how traders as a whole basically react to that report. All right, so the Russell 2000, way weaker. We were looking at this area where I was saying support obviously stepped in. That's not what I'm saying. I was just obviously seeing that on the chart. But sort of, when was this? Wednesday? I was saying that we could potentially get a move higher, but watch out for a break to the downside. We did get that, a pullback right into it, support turning into resistance, and now we're getting one hell of a decline here. Price also opened around about the pivot point at 1,879. No issues reaching the S1 at 1,867. And we got a confluence between a projected range low and S2 around about 1,853. It's very uncanny how prices, especially when you do have a lot of volatile or strong moves, how price actually reaches these projected ranges, which is obviously one of the levels that I'll mention in that newsletter, and a very important, something I watch closely. Maybe to set targets or expect, support or resistance to step in at those levels. Gold. Now, gold came very close to testing the end of last month's lows. Strong move to the upside. This does look to me like a zigzag, something like that, A or B or C. Potentially one leg down, this potentially being corrective in nature, and from my opinion, in a bigger picture, where I think gold could potentially move lower again. Now, same thing with gold. Gonna have to watch what's happening. Gold's been also heavily affected with anything to do with inflation. So if these job numbers come out and they're bad, but like I said, people will expect that they won't hike so aggressively in the future, and then gold could move higher. Like I said, anything could happen. So we just got to have to wait and see. Again, same thing with gold as with the indices, what's going to happen tomorrow and how the markets react to that. Sort of again open around the pivot point 1820, already reached R1 1826, and now has reached R2 and the projected range high, which was slightly below a median line. Now, isn't that crazy how prices also here been respecting support, resistance, broke above resistance, and it's slightly a little bit above these R1 and projected range highs as well. But price also respecting the horizontal support resistance areas as well as the angular support and resistance areas on gold. So my thinking is, after this hell of a decline, with price coming so close to breaching these lows that were set at the end of last month, I'm thinking that we're potentially seeing a corrective move here. Now, again, I'm always the first one to accept that I'm wrong if price proves me wrong. But for now, like I said, I am bearish. This might have just been a correction and might see another decline over the next few days. But again, who knows? We'll have to see what happens with tomorrow's news. If we do start clearing this median line here, which is currently at 1838 with a close above it on gold, then this was potentially just some sort of a knee-jerk reaction, a very strong one, very difficult to read from a price pattern perspective because it's just like sort of one direction to the downside. But I'm still wary that price comes so close to these lows, not breaking it, that whatever that's happening now could just be corrective in nature. Right, and this brings me to crude oil. Now, when was this? I just want to draw a box here. I think it was at the beginning of March when we had our profits at noon session. We were looking at price action sort of at this area, I think. I think that was on a Monday or something, or end of the month. Price and move low. And I said, I expect another move to the upside because that will then give us a nice double zigzag, right? A corrective pattern. By the way, on crude oil as well, I'm pretty bearish. And I've expected this move to the upside to be corrective in nature. Well, price then did move as expected from an area that I mentioned lower. And at that stage, I thought that was the end of a correction. But what happened? Everyone got fooled again, and we had another three-wave move to the upside. Now, this pattern here, and I've actually drawn this in yesterday, is very typical of what we call a WXYXZ pattern, a triple zigzag. Now, very difficult to read. You never know when they're going to appear, but just these beautiful three-wave moves that you've seen. 1, 2, 3, 1, 2, 3, 1, 2, 3. Very typical of a double zigzag, and a double zigzag then turning into a triple zigzag. So I'm thinking that that was potentially the end of this move to the upside. Again, if we look at a bigger picture, then crude oil is in a downtrend, although it's been running sideways for a while. By the way, I also think that we might be dealing here with a triangle. But in the bigger picture, I'm still thinking crude oil is bearish. Price here on crude oil open around 76, 77, however, slightly above today's pivot point. Already reached R1 at 77.44. I did expect a little bit of a bounce, but any bounce I'm treating now as corrective in nature, with price potentially over the coming weeks or so, maybe heading towards new lows to break these lows or set in the beginning of Feb. So I'm bearish crude oil. Again, we'll keep an eye on all of these markets. And when we do look at this again on Monday, we'll obviously have a better idea of how all of them reacted to tomorrow's news event. If at all they reacted, might be a non-event. That happens quite often as well. And then take things up from there again. And again, just get those levels. When the newsletter is ready, a lot of this is going to be making way more sense for you guys. So you have that plan in the morning, and then as I then leave in the afternoon, when I conclude the session, I also, you know, have a better idea where price could move in the afternoon session as well. All right. James says these day trades on a 1, 5, and 50-minute chart. That's a pretty popular charts, definitely. Yeah, if I do swing trading, I actually trade options using futures as well. I love trading options as well. But I do also like trading intraday, James, and this brings me to our tool spotlight today. I'm going to show you guys, I don't know if you've seen this before, what we call here at Ninjacators, the Zorro Futures Trader. Now, I'll quickly go through what all of these lines mean, as well as I'm going to show you the Z pattern, which is actually why it's called the Zorro Futures Trader. It creates a Z pattern. And all the components that I look at, and for you, James, you do trade from a 1-minute time frame. I love trading this pattern on a 1-minute time frame. It can be traded on any time frame for that matter. But I just like the quick, fast moves that I get when the right setups do occur and using this pattern. Again, I'll show you that right now. I've also got an ATM strategy that I've created. I've got 3 of them. Now, if you do decide to, let's say, purchase the Zorro Futures pattern, or you already own it, then I've done 4 live trading sessions that I recorded, I think a couple of months back. And this is where I've actually revealed the ATM strategy. So this only came after those that already own the package, and those that obviously decide to take up the offer potentially today to get the Zorro Futures pattern. Those videos are available because I didn't show you exactly how I trade it live. Love doing it on 1 minute, and so forth and so forth. Okay, first things first. You'll see once you got the tool loaded on your chart, if you can see on the top left here, I've got a button called Zorro, and I've got this TDD button. Now, this is a trend detector. It's this line over here. It's an indicator that basically tells you what the trend is currently for the time frame you're looking at. And then we also have the Zorro pattern. Now, as soon as I click on the Zorro pattern, you'll see it says Add Zorro pattern over here. Now, what you'll do then is click on that. And what you want to do is, let's say you can see the trend detector line's been green, meaning that the trend's bullish. Now, you can also go, before I draw that pattern, you can also go into the actual properties of the trend detector, and you can then go into the settings and you can enable multiple time frames. So if I trade, let's say, and I think it's a very strong trend in, let's say, ES, it works on micro contracts, whatever the case might be, then you might want to go and enable that. And then what the indicator will do is will look at a higher time frame and then plot it according to what that higher time frame is seeing on your 1-minute chart. But I'm not going to do that right now, because I just want to show you how the actual Zorro pattern works for now. But normally you'll look at what the trend is. If it's green on the trend detector, you only want to take longs. So quite often what you'll do is you'll wait for a correction. Let's say you step into the office round about here. You want to then wait for price to break in a trending market condition, a previous high in this case. All right. Then what you want to do is select your Zorro pattern, and you want to draw it from a low to a high before you get a correction. You can see here that price didn't quite reach an area. I'm going to be talking about this zone in just a sec. Then we have another higher high, and then finally we get a decline. Now you see this green zone over here. It's a bullish for taking long trades. And basically this zone here is, if you just very easily go and draw and use your fib retracement tool from this low to that high that I selected over there, this zone is sort of right here at the middle is the 50%. All right. And then what it would do is, you got different inputs for these zones as well that you might want to manually adjust. And during those training videos, I do recommend that you do that. but it is normally on as default set on a 4 tick. So what it does, it takes that 50% mark, which is right in the middle of the Z pattern, and it takes 4 ticks above it and 4 ticks below it. Now, during volatile conditions, where let's say start having a lot of high ranging candles or a very strong trending market, whatever, then you want to actually select and change that zone so it's a little bit wider, right? I'll tell you exactly why I would like to do that, but I just want to quickly go through all the components here. Then I've personally added an ATR, which is an average true range indicator. And all that does, it looks at, I think it's set to the standard default setting, which is 250 bars. And what it does, or candles, it looks at 256 bars in the history and then gives the average range of all those candles and spits it out here on the bottom as a line. All right. So now, very importantly, you've probably seen this before if you're trading. And some guys even use their stop losses or adjust their stop loss distances according to what an ATR means, because your ATR would be higher if market's very volatile. So your candles are typically very range or long range. So if you use a too tight stop, you might get stopped out too much. So quite often you'll have traders look at what is the average true range of the candle prior to I want to trade. And some guys would say, like, I want to use a stop at least, let's say, that average true range at that moment, or 1.5 times that, or 2 times that, just to make sure that you don't get stopped out that often, if that makes sense, right? So I've added the ATR, and I explained it in those training videos as well, just so that I can then make sure that this zone here, which you have to manually input again, is not too, how can I say, too not wide enough, but too shallow or too thin, whatever the case might be. And because if it's too thin, and I'll explain how this actual indicator works in the entry and all that sort of stuff, you might get stopped out too much. So according to what the ATR is, I created here an ATM strategy, which then looks at the ATR. You have to then manually go and see, listen, there are 3 of them, and I need to select according to what the ATR is telling me, the right trade management strategy, or the automated trade management strategy. Now, in this case, you would have drawn this tool from the low. You have this trend detector that turned green, and you want to draw it from a low to a high over here. Then as price pulls downwards, quickly look what your ATR, according to those guidelines, it would have told me I want to have an 8 tick wide zone. You have to quickly manually go into the pattern, adjust that to 8 ticks. And sorry, let me just get my ruler out. You can see now at the moment here, from the low to that high there is 8 ticks, right? So it adapts then, you have to obviously do this manually according to the average true range. And those guidelines works really well for the ES, the crude oil, gold, and the Nasdaq. And again, you can trade the micro contracts here as well. But what this ATR or ATM strategy does, I need to trade with 2 contracts. So once price then gets into high, start seeing a pullback, you draw your Z button, and what you want to do is you see this button in the bottom here. You click
order submitted.
You click it, and what it will do,
Order canceled.
although I changed things around now, it will automatically place an order there. There's also a feature in there where this will turn green, and the order won't be lying there. But as soon as price then touches the upper zone of this green zone over here, you'll be automatically executed into a trade. Now, because I use the ATM strategy that also looks at the distance you must be using for your zone, it will then automatically, obviously, after you've been filled, it will place a stop loss at the bottom of the zone automatically for you. And again, trading 2 contracts, so a stop loss for 2 contracts. And what it will then do is place a, let me just get a line here. What I want to do is actually use colors here so you guys can understand what I'm talking about. Just bear with me. Let's say you bought into the ES. Let's make it lime green. And you got long there. So that line there represents my buy level where I got in, and then automatically the ATM strategy would then place a stop loss. I'm going to color that red, so that's going to be assuming your stop loss just for visual purposes, because I'm trying to explain here what I'm doing with the ATM strategy here. So that is 8 ticks wide. We already shown you that. So what it's going to do is on your first contract or first target, it will place a target at 8 ticks to the upside for one contract. All right. And then what it'll also do is, and this is a number that I figured out, it's about 40 ticks to the upside here. It'll place your second target. All right. Now, don't worry about the second target just yet. What's very important for me in the beginning with these trades is to get to a point where my profit and loss potential is at 0. So what happens if you were to get long here at that candle, but you got long at this level over here, price on the very next candle would have reached 8 ticks quite easily. And I see this quite a lot with this pattern, which is why I also programmed these ATM strategies also according to what the ATR is, that you want to take profit at that level on one contract. Then automatically you will then have one contract left and your stop loss over here. So then if the market would then come lower and take you out, you've taken 8 ticks profit, and then you will lose 8 ticks profit on the second contract. So what would mean is you'll be flat from a profit and loss perspective, right? But how often have you guys seen that if you get into a market, let's say you risk 8 ticks, you go for 8 ticks, a little bit more, and then you start seeing a reversal against you. You move your stop loss too quickly, and then you get stopped out in a remaining position. And just directly after that, as Murphy's Law would have it with the markets, you see one hell of a strong move back up to the upside in your intended direction. That happens quite a lot. And I'm sure a lot of you guys have experienced that when you actually start trading. So let me just minimize that ATR here. So what I want to do is get to a position very quickly to a position where my first contract's taken, and then whatever the market then does, I can sit back because I know if it reverses against me, then at least, you know, it'll be a scratch trade. I'll be on 0. But what I then do is with the ATM strategy, it's still automatically doing all of this for you. I'll then wait for a move that goes 3-to-1, my original risk distance in my favor. So this was 8 ticks. So 8 times 3 would be 24. All right. Let me draw another line in here. Now, once price reaches a 3-to-1, again, 3-to-1 from my entry to stop loss was 8 ticks. 24 ticks is a 3-to-1 to the upside. As soon as price reaches it, and this will be at this candle over here, my ATM strategy would automatically then move my remaining position stop loss to break even plus a couple of ticks. And then once that candle closes, only then would I manually take over. And because this gives you enough time for the automation side to do its thing, get you that first profit, get your remaining stop loss at break even plus a couple of ticks. But then after that, I manually take over. Obviously, I don't let this go and do its own thing. I'm always here. Sometimes because I'm a bit more of an experienced trader, I can have this running on, I can look at 3 or 4 different markets. And obviously, I've got to keep a good eye on what my overall risk would be trading 2 contracts. Again, I could trade micro contracts, whatever the case might be as well, depending on what my risk is. Sometimes I get into 2 different markets at the same time. But what I'm trying to say is your risk management from the ATM side does most of it for you until that stage when it reaches a 3-to-1. In this case, 24 ticks. And then that's it. So it will then break your, this was my entry level over here. It will bring my stop loss on a remaining position, 1 contract, to break even plus a couple of ticks. And when these candles start closing, I'll then start manually trailing my stop 1 tick below them. Now, there's a very particular way that I trail my stops. I want to see candles moving in my direction, in this case, green candles, and they need to close above the previous candles, in this case, the wicks, before I will move my stop. In this case, we have another nice strong one to the upside. I'll move my stop to there. We have another one closing above. Actually, it didn't close right in line with that previous candle. I would not trail it. This candle closed above that previous one over here, and then I'll manually trade it over there. This candle closed in line. Next candle got taken out. But what did happen was I got 39 ticks, almost a 4-to-1 on one contract on that remaining move there. And the reason why I do this and I program this ATM strategy, why I manage it like this is, number one, to get your P&L to break even as quickly as possible after that first target's hit, equal distance from where you enter to where your stop is. In this case, it was 8 ticks. You want to wait until price then moves a certain distance in your favor. The ATM strategy then brings your remaining position to break even plus a couple of ticks, and then you start aggressively trailing your stop. And what it does on that second position, or what it does actually before that second position, before you start trailing, is that you give the market space, enough time and space to do its thing and move without getting stopped out too often. Now, when you do get these very strong trending moves like this one we've seen earlier today, and you then start trailing when price reaches that trade management level, in this case 24 ticks, that you can then manually move your stop loss. And then if you get a strong moves, you can really milk as much profit out of the market as it's willing to give you. And you can see that it was pretty much the high of that move anyway. I think we're sitting down here currently. So yeah, that's how I manually trade it. Again, the Zorro pattern on its own, very simplistic tool, together with the trend detector, keeping you on the right side of the market. The Zorro pattern then enabling that when you do see a movement lower, again, you have to manually draw on this pattern, but then selecting at the same time, looking at what the ATR is, the corresponding ATM template that I've built in here. You see, I've got quite a few of them here. And then knowing that according to those videos that I've done, if you do decide to take on this package, then, you know, at least it gives you that sort of semi-automation in the beginning. Again, you still need a human input to draw the pattern, but then the ATM strategy takes over, gets you in a trade, places your stop loss, moves it to break even if price moves a certain direction in your favor, and then you take over and manually start trailing your stop to the upside. One of the more simplistic tools that we have on offer here at Ninjacators, but I must say, I've been going through probably about 8 different of their tool sets. They're all fantastic, but I have to say it's probably one of my favorite ones, just because it's very simplistic in nature. And I have to say the amount of times that price actually hits a zone, or one of these zones gets you in a trade, you at least get to a very high percentage that first movement in your favor to take that first target. So you can get your position of your P&L to pretty much a break even. And then you can sit back, and if you get stopped out, then your remaining position, then so be it. Look for the next setup. But when you do get those runners using this ATM trail and then manually taking over, then you milk, you're able to milk out these nice strong moves in your favor. And quite often they're 4-to-1s, 5-to-1s. I think during one of the videos I had an 8-to-1 in there. So very nifty little indicator. Obviously, you can use it in bearish setups as well, for bearish setups. Let me just get rid of all of my drawing tools here. I don't know, was there any sort of bearish setups earlier today? Maybe this one over here. So you'll select, in this case, for a bearish setup, wait for your trend detector to turn red. I don't know if there was one. There was one over here. Again, the ATM was at a certain level that I would use actually a zone that should be a little bit thinner than that. Again, all of these guidelines are in the actual videos that I've done at the companies, the software. And yeah, you will have to go to Zorro Fortic. And you can see into low, we could have used that one over there. You would have got filled earlier on. and this trade would have been profitable as well. Right, that in short, I know it's a very long explanation, but I do like jumping in depth into how these tools work. Again, very simplistic. There is some manual, how can I say, work required here in drawing the tool, determining what the ATR is, setting that zone according to those guidelines that I've given in the training videos, and then also selecting the corresponding ATM strategy so that it takes over most of the heavy lifting for you. Bank at first profit, trial your stop in a certain, once price moves in a certain amount of ticks in your favor, and only then do you manually take over. All right. A lot of talk there from my side, but I really do like this tool. And that's pretty much it from my side, guys. Nathan will take over now again. Give you a bit more info on the Zorro pattern, futures pattern, and how you can get hold of that.
Sure thing. Fantastic. Thank you so much, Richard. I, for one, do appreciate the in-depth demo there. And yeah, this is one of our favorite tools, so we're always excited to show this one off. I have also just made available in the chat, you'll see I dropped a link. So we are basically, it's an exclusive promo for you guys joining us here in the Profits at Noon sessions. So when we do run a promo on Zorro, you can take 70% off the price and grab that for $297 right now. So if you're interested in that, please check out that link. We want to encourage you to act on that sooner than later, because we will have to pull it down at some point. But we do want to also leave some room for some Q&A here. If you guys had any questions for Richard in terms of the analysis, the levels, or our Zorro futures trader, we're happy to get into it. And we also did have one question, Richard. Eric wrote in. I don't know if we'll have time today or if you have it loaded, but maybe we can even look at it for the near future. Eric was interested in seeing the volume spread scalper.
The VSS. That was my previous 4 videos. I'd actually had 5 videos on the VSS.
Okay.
Because I'm going through them very slowly. So that's included in the members area. Who's asked the question?
Eric.
Eric, did you get the VSS? Are you an owner of the VSS?
Yeah, Eric, if you're still with us, chime in. Let us know if this is something, maybe if you're just kicking the tires or it's something you're already using. We do generally wrap these sessions around the 45-minute mark, but we do have plenty of space for tool demos ahead. So if we're not able to cover that for you today, Eric, definitely in the future, please join us again next week. Of course, we'll be back on Monday, Wednesday, and Thursday at noon Eastern. We'll have more special guests for you, another tool spotlight, and we can certainly bump up volume spread scalper in the queue.
Yeah, I'll be happy to show the VSS maybe next week. Perfect. No problem. Just mention, I don't know if you have any international attendees here, because of the what's his name, the daylight savings might affect them. Potentially people in the US as well. I don't know which side they are, but
sure.
So on Sunday the clocks go backwards again. What's the story?
We actually go forward.
I'm not completely not used to. I know it exists and it affects me by 1 hour, but yeah.
Yeah, count yourself lucky, sir. We actually will be going forward. So you and I, Richard, will only be 6 hours apart. I know right now we're 7 hours apart. Okay, it looks like Eric was here with us. He says, okay, thanks. So Eric, please join us again next week. Again, we will be started again on Monday at noon Eastern. We're happy to bump that up for you and make sure you're able to see it. And one thing we like to do as well, if we're able to kind of check that out on Monday, we can also circle back and dig a little deeper on Thursday. So we'll definitely.
Yeah, I also want to get a hold of Kyle. I don't know if they've actually sent out those 4 videos just yet, because I really do explain it really well, the VSS there. Again, these 4 videos will be available for the Zorro Futures Trader as well. Sure. But it might not have gone out yet, Eric. So I can touch base and maybe ask them tomorrow how far they are with that. And if you didn't receive it and they did send it out, then I'll make sure that you get hold of it. Okay.
Sure. Yeah, and just so you guys and gals are aware, We're in the process of revamping a few things in our members area and just building out some things and some updates there. So Richard, any of these tools that he's spotlighting for you, Richard has also spent time with on his own, creating video guides for. So one of the cool things is, when you see Richard use it here, if you decide to use one of our products or tools, you'll then get into the members area. And as Richard mentioned, he's creating all this infrastructure for you. So it's kind of like you'll just pick up right where we left off here in these sessions, and Richard will have all these video guides prepared for you within the members area. So we'll be sure to keep you updated on those efforts, as well as our Levels to Lock newsletter that will accompany these sessions. And again, you heard us mention our time difference. Richard is currently 7 hours ahead of me in the Eastern time zone. After this time change, he will only be 6, but the reason I stress that is because Richard is up bright and early generating these reports. So those Levels to Lock newsletters will be available roughly by 5 a.m. our time here in the Eastern time zone. And even if you're in Central, wherever else, it'll still be a few hours before you're up and at 'em. So that'll be another cool detail. So just stay tuned to these sessions. Keep an eye on your inbox. We hope to have plenty more updates there. If we don't have any questions today for Richard, whether it's Zoro's Future Trader or any of the analysis we covered, we'll probably go ahead and wrap this up and send you guys out into the weekend. Give you 1 second here just to fire away in the chat if there's anything, but we'll use this opportunity to tackle our parting wisdom. So our parting wisdom has most consistently been, if we don't have a plan, we're planning to fail. So outside of that, if there's anything you just want to reiterate, Richard, as far as what we should be looking for in between these sessions, any big moves or any news, anything like that?
Yeah, like I mentioned in the beginning, I was talking a lot about it. It's like sort of bad news these days, good news for the market. So really keep an eye on tomorrow's job numbers. If they come in terrible, but they've been very resilient and very strong for a long time. So that's sort of, told the Fed we can keep on raising rates. So if the numbers are bad and start affecting those, the signs that start affecting the jobs market, then the market participants might perceive that as that the Fed won't be that aggressive with their next hikes. So that might then reverse things higher in this case. It's a bit like reverse of what you probably taught in economics normally in how markets behave. But yeah, keep an eye on that. Be aware of it. Might be very volatile. So yeah, just trade safe. Always use a stop loss, and yeah, have a plan ready. And that's it from me, really.
Awesome. Fantastic. Well, I'll just reiterate one more time, guys and gals, that link we've dropped in the chat will save you about $700 on the Zoro Futures Trader listing on our website. So do encourage you to go check that link out, take advantage of that discount if it's something you're interested in. And again, we will be back on Monday of next week at noon Eastern. So we hope to see you all there joining us. We hope you all have a great weekend in the meantime. And if anything comes up in the interim, please feel free to head on over to our website. You'll see there's a phone number plastered all over. There's also a contact form if you want to reach out via email. We're always here. We're always available to you. So please do not hesitate to reach out in the meantime. And we will see you again on Monday at noon Eastern time.
Hang on quickly. Murray's asking, he doesn't see the link.
Doesn't see the link.
Murray, it's just above your current message.
There we go. Just pop it in there again.
Yeah. So go click on that and go check it out.
Perfect. Yeah, Murray, we'll give you a second to grab that link before we kill the session here. Again, that'll take you right to a special order form that knocks off 70% of the MSRP price on the Zoro Futures Trader. So lots more tool demos on the horizon for you guys. It sounds like we have a contender for next week with the volume spread scalper. So stay tuned for more. And yeah, Murray, hopefully you're able to grab that link. It looks like a hand actually just went up. So Peter, if you want to fire away here in the chat or let us know. We're happy to address that for you before we leave here today. Just give Peter a second here if he wants to fire away in the chat, the Q&A, wherever it works for you. We're happy to address that.
Good, all good.
Perfect. Well, it looks like maybe Peter didn't have a question after all. So with that, we will just go ahead and wrap this session. Guys and gals, thank you again so much for your time. Thank you for spending it with us. And as always, thank you, Richard, for the excellent insights and the analysis.
You're welcome. Perfect. Thanks, everyone. Thanks for joining. Like Nathan said, have a fantastic rest of your day. Great weekend, and then we'll see you guys back here on Monday, same time. Until
Perfect. All
then,
right.
take care.
Cool. All right. Have a
Cheers.
great
Bye-bye.
weekend. You too, Richard. And yeah, we'll see you all again on
Bye.
Monday.
Do better. Cheers.